You want to build an auxiliary dwelling unit or an ADU, but you have no idea where to start. And if you're like most homeowners today, you're thinking, how can I make a little extra income from my home? Or maybe, how can I make a little more space available, but I don't want to touch that great low interest rate that I have locked in on my home right now. And maybe you're like most people where you literally feel stuck and a bit overwhelmed by all the conflicting information you can read online. Well, as a homeowner and an investor, I want to make it easy because it should be. The average homeowner in the United States has $206,000 in tappable equity in their home. That means leaving 20% equity inside the home to protect you. Well, if you're here in Colorado, you have $250,000 in tappable equity at an average interest rate of 3.9%. So let's look at the options to finance an auxiliary dwelling unit. Some that refinance that great rate that you're locked in on, and others that don't touch it. But before I jump into the 5 ways you can finance an auxiliary dwelling unit and how I can help you, can I ask you a favor? Please share this content and comment down below your experiences with ADUs, or even better, other financing hacks you want to know so I can create content around it. And if you geek out on all things home ownership and building wealth through real estate, make sure to subscribe and to get notified when we release our weekly content. All right, so let's jump in. ADUs can take all kinds of forms, like detached in your backyard, attached to the main house, in the basement, or above the garage. And there are pros and cons to each. But mostly, it's a question of space and usability of the lot in the home. They also have tons of uses. Short-term rental income is at the top of the list. But what about working from home, or needing that yoga room, or that she shed, or even more common today, how about adding space for aging parents? ADUs are becoming more and more popular as homeowners are trying to optimize their property, given the rising cost of home ownership. And not only do ADUs add versatility, but they also increase the value of your home. So if you've decided that you want to build one, but you don't know how to finance it, who has an extra $200,000 to $400,000 sitting, burning a hole in their pocket? Wow, are they really that much? They can be. Having said that, Home Depot and Amazon are selling them, so there's that. Your options to finding the right ADU vary from getting one drop shipped to modular to custom build. I have incredible personal resources to help guide you on making that decision. So please, again, comment down below or reach out to me personally if you'd like to go through your options and get connected. But today, I wanted to focus on the financing part. Like most people, you might not have the money sitting in a liquid savings account, or even if you do, you might not want to spend it on your backyard. So here's 5 options to help you finance the ADU project. Number 1, you could get a home equity line of credit, or commonly referred to as a HELOC. I typically go to this option first. It's usually the cheapest option, and it capitalizes on the equity that you have in your home today. It typically offers lower interest rates compared to personal loans or even construction loans, but it is variable because it's based on the prime rate. It has flexible repayment options. You could do interest only or principal and interest. You could lock it down or leave it variable, but it is limited to the equity that you have in your home today. So if you're counting on that auxiliary dwelling unit to increase the value of your home, you might not have enough equity today to actually tap into to build the auxiliary dwelling unit. The second option is a cash out refinance. Again, I want to stick to based on the current value of your home. So you can take a cash out refinance and refinance your existing mortgage and take out all the existing equity in cash to fund that ADU. And that way you can do it on your own timing and in your own process. This can result in a singular monthly payment. So it's similar but a little bit different than tapping into a HELOC. A HELOC would be a second loan in a position that could be variable at a slightly higher interest rate than the interest rate you have today. Whereas a cash out refinance, again, might refinance you into a higher rate than you have today. It is going to be one singular payment. And potentially it could be a lower interest rate for anyone who bought after our pandemic historically low interest rate environment. The third option is a little bit separate than your home. It's a personal loan. I've worked with a lot of people who have gotten personal lines of credit. This is typically unsecured loans that can be used for really any purpose at all, including ADUs. It's super fast as far as an approval process, but the interest rates are going to be higher because they're going to be more typically associated with maybe a credit card versus a line of credit on your home. The fourth option is a construction loan. Now, we do renovation loans, and they're in a first lien position. The big benefit to a renovation loan or a construction loan is that it is taking the aspect or the value of the home post-construction. Whereas the options that we discussed earlier tied to your home are limited to the current value of your home, this one is specifically designed for new construction projects, as it's going to be valued based on the future value of your home. Funds will be dispersed in stages as the project progresses. So you have a little less freedom. You're certainly going to have to get a licensed and bonded contractor, and it's going to be based on a schedule. And many times, these construction loans will convert to a permanent mortgage once the work is completed. Now, there are two subsets to a construction loan. The conventional renovation loan is called the home style, and you can use it whether you're purchasing a home. I have a client right now that's purchasing a single family home that he knows he wants to build an auxiliary dwelling unit in the backyard. So we're going ahead and including the construction costs for that build of the ADU into the purchase financing. So you can do it to either purchase, or if you already own the home, you can do it as a refinance. Now, this option is pretty cool because it's a Fannie Mae product. It allows you to put as little as 3% down if you're using it to purchase, or go all the way up to 95% loan to value if you already own the home. The government option is the one that most of us know about. That's the FHA 203K or 203KS, which is the streamlined version. Now, it allows for a little bit greater flexibility on interest rate, on debt to income ratio, and on credit score. Now, both the Fannie Mae Homestyle and the 203K can be used to build that ADU, as well as do other renovation projects at the same time. Like maybe you want that ADU in the backyard, but you also want a brand new kitchen. You can also refinance the home mortgage. I know some people would be thinking about that, saying, I don't want to give up my low interest rate and refinance it all into today's interest rates. But remember, you can refinance this at a later time when interest rates drop. Or certainly you've got to look, how much is that construction going to cost me versus how much is the loan that I currently have locked in at that lower rate. You'll want to do a comparison and make the best educated decision based on your personal finances. Now, the fifth option is my all-time favorite. It's a construction loan in a second lien position. It gives a lot of versatility in today's market where people have locked in lower interest rates. The construction loan in a second lien position is built just for ADUs. This option not only was built with the ADU in mind, but it does not refinance your current loan. It adds a second loan as a construction loan based on the future value of your home, adding that ADU. Well, there you have it. 5 incredible ways to finance an ADU. Of course, there's always cash. And when you're diving into your ADU journey, make sure you align yourself with a great team who can walk you through all the options. I'm Nicole Ruth, and not only do I believe in the power of home ownership, but I also believe in optimizing what you have with an income generating or space relieving ADU. So let's hear it. What are your thoughts on getting started?